I think that there are some internal inconsistencies in the Trump economic model, which, whether it's Navarro or Donald Trump, one would have to come to terms with sooner or later. You can't have tariff and a weak U.S. dollar. You can't have tax cuts and a strong fiscal position. And you certainly cannot have fiscal softening and be able to deal with cost of living. So I see several internal inconsistencies. This issue that we're going to raise tariff, but if somehow your currency weakens, you're a currency manipulator, I don't think would stand up to scrutiny, because China, I don't think, has to intervene to push their currency one way or the other. The market will make it weaker, and that weakness will spread to the entire EMFX complex. It will not be just China.
Taimur Monday has a question.
I most certainly do. I'd love to continue this currency theme, one of my favorite topics, considering that the DXY, the dollar index, Taimur, is above 107 again. Not quite at the year's highs, but nonetheless very close to it. Doesn't Donald Trump, though, prefer a weaker US dollar if he wants people to bring back manufacturing to the United States?
Right. So I think this is one of those glaring inconsistencies in the model right now, that how can you have tariffs and a weak U.S. dollar? One or the other would have to give. So that's where it goes back to the point that Sri was raising, that what is our best bet with respect to tariffs? Is it an opening gambit of 35% on top of what is there already, and then China backpedals or promises to buy certain things from the U.S.? And if the market really sees this as a back and forth, maybe the dollar doesn't soar the way one would fear if the tariffs are indeed substantial and here to stay. I think right now, having had the dollar rally over the past month or so, the market view is coalescing around that brinkmanship. I will threaten to hurt you, but you know that I'm not being fully serious. I just want you to soften your stance, and then we can have something to talk about. If that is the right verdict as far as the market is concerned, maybe we don't have huge tariffs and a soaring U.S. dollar. We have tariffs that go back and forth and not so hard upside move on the U.S. dollar from where it is already, which I think the market's verdict has been that tariffs are disruptive, it is problematic. Hopefully somebody in the White House is listening to that message.
Yeah, it's like it's either lower prices or tariffs. You can't really have both, can you? So what happens then once the Fed continues cutting its rates, and will it cut rates next week? At this stage, it looks like it's almost completely priced in by the markets. Do they continue to cut, and what will then happen to the US dollar?
I think we will look back at the last 4 months of 2024 as a series of self-inflicted wounds by the Fed. I think the September 50 basis points rate cut, when we look back now, was certainly a mistake. There was no urgency to do that. If anything, the U.S. economy has been going strength to strength, and inflation hasn't come down as quickly or as rapidly in that final mile between 3 to 2% as one would have expected. But having given very strong forward guidance that the Fed is in a position to cut rates, if inflation is in the 2.5 to 3 range, 5-ish Fed funds rate is just way too high, it will come down. I think the Fed has sort of tied itself into a corner, so it will go ahead and cut. But I do expect to hear some degree of hemming and hawing about the outlook next week, where they will say that we really have to watch carefully what's happening with the inflation dynamic and the overall labor market. Mind you, the labor market hasn't softened as much as the Fed would have expected to see happen given the protracted period of tightening that we have had. So the sum of the softening that we've had, in my view, has been sort of for nothing. So they cut now. Then the big question is Q1, Q2, with the tariff backdrop, with the fiscal backdrop, where the Fed goes.
Absolutely, and they need to give themselves maximum optionality.